Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we are down around 30 basis points on the 1 hour chart. We do see we are dipping onto negative MACD, and as for the 4 hour chart, we saw a divergence on the MACD. We're still positive on the MACD, but we're heading down lower. We're going to test the 200 moving average support. On the daily chart, we saw a nice convergence on the 9-day moving average onto the 18-day moving average, the blue line converging onto the purple line. And we also see a nice positive for the daily MACD. So that is a good sign that this uptrend is still strong and intact. So if we were to head down lower, I do see a possible support at the 9-day moving average, which is around $295.60, or this 9-day moving average line, and I'll mark that as our immediate support. So I'll have that. And as for resistance, the resistance will be the all-time high where we left off back in September 19th. So right around $302.63. So if we were to move on higher, that price movement is roughly around 1.4% to the upside, and to the downside, that price movement is roughly around 94 basis points to the downside. So let's head to the forecast model. So this forecast model is now available in the link below, so check it out. So I'll go day by day where the S&P 500 will head to next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below it is the trend that I believe is the best match. So let me point out why these two trends are similar. So what we have here, we start off on the upper Bollinger Band, and we proceeded to lose steam and touch the bottom Bollinger Band. Next we make a nice reversal to touch the upper Bollinger Band once more, and after that we see a second time where we touch the bottom Bollinger Band. And finally, right towards the end, we see it peak above the middle Bollinger Band, and we do manage to close above it for several days, not quite touching the upper Bollinger Band yet. So we have those points on the current trend, and below it is the trend in question, and this dates back to June 14, 2010 to September 8th, 2010. So let me point out why these two charts are similar. So we started off touching upper Bollinger Band. We proceeded to head down lower, touch the bottom Bollinger Band. After that, you expect it, touch the upper Bollinger Band once more. And then we have one more instance where we touch the bottom Bollinger Band. And finally, right towards the end, we see it close above the middle Bollinger Band, not quite touching the upper Bollinger Band. So we have those instances at the end. So we have about 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was June 14 to September 8, 2010. Back then, the S&P 500 was up roughly around 1.8 or 1.9% to the upside, and looks like we may even break a new all-time high in the next coming days. So ideally, it's in favor to the upside in the next coming days. So this forecast model is now available, so check out the link below. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.